Hey folks, thanks for tuning in to our MMG weekly recap. So this is a week where, what we've dealt with as mortgage professionals over the last, now it's almost 10 months is Federal Reserve jawboning and uncertainty and volatility around where is the economy, has inflation peaked, what about the labor market, and what is the Fed going to do about it? Well, this particular week, the Fed did a lot of speaking, but the bond market kind of bucked it. I mean, we've been in another sell-off in bonds and a nice little spike in rates, unfortunately, for the last 6 weeks. But this week, things calmed down a little bit in the face of some tough talk. And so you have to watch the technicals where we are technically, and I'll pull up a little chart here. You can see that on right side here, mortgage-backed securities are hanging around near 99 level, which ironically is just above the price lows and the rate peaks of 2022. And this is now 12 days removed from the next Fed action, where the Fed is going to raise rates, highly likely by 75 basis points. But the last time they raised rates by 75 basis points, bond market actually liked it. Long-term rates liked it, because I think the biggest risk that we have right now is too much Fed. And now the other thing that you have to watch as a mortgage professional going into next week is the ECB raised rates by 75 basis points recently. And then they just announced today that they want to, quote unquote, shrink their balance sheet or get into what they call quantitative tightening. We still look at the forecasts that the Fed have for rate hikes and the forecasts of what they have economically as, maybe too hawkish and too optimistic. I think Europe will have a tough time growing if they start tightening financial conditions. They're going to limp right near probably recessionary levels, or if not slip into a recession. And so that means that our rates and our yields should be relatively, there'll be a limit how high rates can go, simply because of some of the external pain economically going on around the globe. So next week we have some inflation numbers. They will be big. We get past this inflation number, we could see a real nice, I think that would confirm hopefully a peak in rates, because it feels like energy prices have finally come down because of a global slowdown. And there's a lot of different pockets of inflation that have also rolled over. So let's hope, because that'll be a big deal. If it comes in higher than expectations, it's going to be a rough slog for interest rate environment. Hope this finds you well. Have a terrific weekend, and we'll be talking to you soon. Bye for now.